Hey guys, welcome back. This is the Bitcoin market review for September the 27th, 2022. And before we start, I again want to show you the economic calendar for yesterday and what happened. And as you can see, at 7:30 a.m. we had a high impact news event for US dollar, and again one at 10 a.m. So we're gonna check if they actually did something to price. Let me check. 7:30. 7:30, as you can see, infused some volatility, some bigger candles here, and then 10 a.m. Oh yeah, 10 a.m. led to like the kind of weird consolidation movement up here, which we're gonna look at a little bit later. So that's that, and now get right into this. Do we get into setups? Yeah, because then I wanna talk about like what price did yesterday. So like why it ran up and then why it reversed. But I'll talk about that in the at the end of the video. So the first setup is actually a 15-minute setup again, and it is right here. As you can see, with a high, this high breaks it, and then price drops down back into a discount, going into a value gap right here. And yeah, these two candles act as order block, and does it touch that actually? Don't know. 29. Actually, it doesn't touch it, but it touches that fair value gap. If you look at the low up here of this candle, it's 20.095, and if you look at the candle low of this, it's 20.091. So it touches this fair value gap by a tiny margin, and then runs off and runs it back up again, up above this high with this run up here, and then it reverses. So nice setup on the 15-minute, and yeah, it's the only setup on the 15-minute. Oh, we could actually look at it on the 5-minute. And then you see it's also visible on the 5-minute. If you can see here, ran up, came back down into discount, and touched, like on the 5-minute, the fair value gap right here is way smaller. But as you can see, it just touched it, and then it reversed and ran up above this high. So that's the 15-minute setup done, and we stay on the 5-minute for the next setup, which was here. We had the start of the run up, like the uptrend starts here, and then you have another low to a high, which then actually, let me draw it out like this. Yeah, then the 0.5 is visible. Runs up above these highs, but not above this high, so we expect it to run that high. So we're looking for longs. Price comes back down into a discount, perfectly touching this order block. Again, let me draw that out for you. So we want to have this to that. And as you can see, this candle, the close of this candle is in a line with, actually we have the wrong one. Now, there we go. Is in a line with the open of this candle, which is the order block, and then it starts to reverse. So we have no fair value gap here on the 5-minute, but price respects the order block perfectly and then goes back up. We can actually look on the lower time frame. Yeah, no fair value gap on the low time frame. I mean, there's one up here which it ran, but there's no fair value gap all the way down here. Yeah, the lowest one is here on the 1-minute, which is this fair value gap right here, which is the lowest one it touches, or the lowest one we can find, because on the 5-minute it's higher and on the 3-minute it's higher. But still, perfect setup, or really nice setup, you know. Let me get back here. Runs up above this high, but doesn't run above this high, so we expect it to go higher and take the liquidity above this high. So we are looking for longs. Price comes back down into a discount, respects this order block perfectly, and then reverses and runs this high with this move up here. And then this run above starts the next move. As you can see, price then moves up and tries one more time but fails, and then pretty much crashes down. And this crash down is where we want to pull up the fib tool. Actually, let's do it like this. And then it comes back up, filling a couple of fair value gaps. Okay, come on. Let me draw that out. And another a big one right here. And there are probably some other fair value gaps on a lower time frame. I would assume up here. So let's check that. Yes, there is one on the 3 minute right up here. We're just gonna draw that out. Okay, and go back to a 5 minute. Because what's also visible on the 5 minute is that, look at the open of this candle. The last up close candle is our order block. And the low of this is respected by the close of this candle and the open of this. So by the bodies of these candles, they respect this order block. So that's very lovely to see. So what we have is a reversal, a break in market structure, while breaking 1, 2, 3, 4 lows, nearly 5. This is nearly broken, but breaking a couple of lows, so we have a break in market structure, a shift in market structure. Then price runs back up, filling all these fair value gaps, runs deep into discount, filling fair value gaps, and then respecting this order block right here. Actually, let me delete that so you can see it a little bit better. And I want to draw it out. We did it at the last one, so we're going to do it at this one as well. As you can see, the closes of these candles perfectly respect the order block, and then it starts to reverse. And as I mean, first it drops below it here, but then this is the 10 AM candle, and as we've seen, 10 AM was a high impact news event. And what this did is infuse some volatility. As you can see, price then started to tightly consolidate. On a lower time frame it's better visible. The price went up, down, up. Always touching a discount, and touching a discount once more prior to then really going for the sell-off. So that's something we have to be aware of, that high impact news events can infuse liquidity to the market, and this can hold on for some time. Like news dropped here at 10 AM, and then for like all the way to like 11 AM, price did a weird like up-down movement. But it always went for a discount, reversed a bit, went for a discount, reversed a bit, went for a discount, and here then eventually it reversed. Like 1 hour after the news event, it touched the discount once more, and then it started to reverse. So this pretty much was the best entry to catch this big move down, which happened during lunch. So this was the highest entry you could have gotten for catching this lunch downwards move. And we have two more setups, or a couple more setups to catch this downwards move. So the 5 minute here was the best one, but there are some on the 1 minute. These are also quite nice. First one being this one. As you can see, we started a downtrend pretty much, like we ran these highs. This was the candle which touched this counter last time, and then we started to reverse. Then we had this run up right here and a breakdown which broke this low. So with a break in market structure or market structure shift, however you want to call it. And then if we have something like this, like we expect lower prices, we have a market structure shift, then we look, okay, yeah, we have a fair value gap. We take our fib tool from the high to low and see, okay, the fair value gap goes all the way into a discount, price goes all the way into a discount. This is what we want to see. We want to see price go into a discount, filling the fair value gap or touching it, but here it fully fills it. It respects these up close candle, or this up close candle. The bodies of these candles don't go into it. Very clean price delivery, and then it starts to reverse. Breaks this low, and then immediately goes for another setup. So this was the first setup prior to the big move down, and then the last entry prior to the, I'll call it crash down, was this. So right after this one, price breaks down once more, breaking this low, leaving behind a fair value gap, and price runs up into a discount, and again candles, I mean it's not as clean as the other ones, but price more or less respects the order block, just goes into it a little bit, just by a tiny margin, and then starts to sell off, and then that's where the real sell-off happens. But that was the last entry above the daily open, the purple line right here. So last entry above the daily open to catch this move down. And we also have the possibility to entry in this down move. Or there were some setups we can journal during the down move. And the first one being this one. As you can see, price printed a high, a low, another high, went through this low right here, and then went back up, and it left behind, there's a tiny fair value gap up here. Gonna draw that out. Yep. And there's another one right here. So now we can use the fib tool from the high to the low, and what we see is, first, price breaks this low, leaves behind fair value gaps, price then moves back up through these fair value gaps into a discount, more or less respecting this up close candle. It's not perfect, but we have to consider this is during lunch and during a volatile down movement. So price delivery is not gonna be too clean, as it's really repricing to the downside. So it's not gonna be too clean, but still, it's a perfectly valid setup, and I'm gonna journal it. So, break of this low, move down, which leaves behind fair value gaps, price moves back up, filling these fair value gaps into a discount, more or less respecting this order block, and then sells off again. And here again we have another double entry possibility. So a setup next to a setup, and as we can see, this sell-off broke this low right here, left behind a fair value gap. The fair value gap is more or less in a discount. Price then moves back up to touch it and go into a discount by a tiny margin. I'm gonna zoom in for you right here so you can really see it. Here you can see price moved up into the fair value gap by a tiny margin, touching a discount. Like it goes into a discount by a couple of bucks. So okay, around 19. Where does the discount start? Pretty much like 19,439. Okay, oh, we are really close. 19,439.3, and it goes to 19,439.8. So like 50 cents into a discount, and then it starts to sell off again. And like these two were setups where you could caught a nice portion of the move still. And again, it's one of those double entry possibilities. Exactly like we've seen here with setup 1, this one for high to low, back up and then down. And then the second one, high to low and back up into a discount. So two setups next to each other, and the same is here with first setup and then the second setup right here. But as I've said earlier, it was like the down move happened during lunch. You know, it started at like 11 o'clock and went all the way through lunch, all the way to like 1 p.m. So during lunch it just dropped. And now let's go in here, because once it fully dropped, we have one more setup prior to reversing, and it is, yeah, it's this one. As you can see, like we have a low, a high, a low right here, and then like it starts, like it's more or less a downtrend. This is not the cleanest setup, but still it's a setup. We can journal because there's a little bit of background information here we can use. So we have the down move, which breaks. This is the first low it breaks, and this is the second low it breaks. So it breaks two lows, leaves behind a fair value gap, then price moves back up into this fair value gap in a discount, nearly fully fills it, and then it doesn't sell off. It goes down, doesn't break this low, goes back up into a discount, now fully filling this fair value gap, but respecting this order block right here very cleanly. So from this to this, as you can see, these candles, or the bodies of these candles, respect the order block very cleanly. So they respect it. So we are still confident in our trade, and then eventually price drops down and takes out these lows. And why I think this trade can be journaled, or why it's worth journaling, is because very often at like after 2 p.m. or like we had the down move, then from like 1 p.m. to like 2 p.m. we had a consolidation, and then after 2 p.m. price dropped once more below this, and then it, you know, started to consolidate into the evening. Or consolidate and then break down once more. But it's a trade worth journaling, because in Bitcoin I found out this happens quite often, that price consolidates at around like 1 p.m. and then after 2 p.m. it breaks the after lunch low or after lunch high, depending on where we think price is going. And here we still think price is going down, so the after lunch lows are here, like pretty equal lows. as well, with this one being pretty much equal. And so price takes out this once more, and then it starts to move about a bit. So that's why I still think this is a trade setup worth journaling, as it happens more often, or quite often, that after like 2 p.m. or around 2 p.m. price takes out the high or low which formed during lunch or after lunch. So like 12 to 13:30, and this happened like at 13:40, so it's still in the range, I would say. So prior to 2 p.m. it should form the high or low, and then after 2 p.m. it's taken out. That's only something I picked up, which Bitcoin does quite often. And yeah, there's one more setup a little bit later. It's at 9:30, so it's a really late setup, but it's still a setup we can journal. It's quite clean. We have a fair value gap right here. Okay. We have a break of this low. And we draw out the fib tool. So, I mean, we break these lows right here. With this move down, we go into this tiny fair value gap right here, but still we have this low, and we expect lower prices for the day. So it's still a trade worth journaling, because this is quite a volatile down candle which breaks this low. Price then moves back up, fully filling this fair value gap into a discount, and then it starts to sell off some more. And why we can trade this is, as we see, price consolidated from like 3 p.m. all the way to 8 p.m. like pretty tight range, and then at the 20:30 or 8:30 it ran above that, and then it started to reverse. So we already have a downtrend. We ran above this high, so we took some liquidity, so we expect lower prices. And that's why we can go short here, or why we can journal this short trade, as we took liquidity on this run up, and then we already have a downtrend right here, or a downtrend forming high, low, another high with the low right here, which is a lower low, another high, another lower low. So it's the third high low we see, and that's why it's a valid setup. So yeah, clean setup, and the last setup for today. And I said in the beginning I want to talk about like why price moved like it did yesterday. And we saw a big up move on Monday, and then price started to consolidate here, more or less consolidate. So why did it run up? Let's go to the daily. On the daily, we see we had a fair value gap right here, which I thought we would run to. Like, I actually thought we would run into this and then reverse, but we only came very close. Let me remove that. As you can see, the fair value gap starts here. That would have been 20,541, and we went all the way to 20,385. So we came very close, but we didn't run into it. But we did run something else. If we draw out the highs of last week's high, and then we drop down into a lower time frame again. That's the week from the high from last week, and price was looking for liquidity up here. I thought it would go into the fair value gap to take the liquidity, but draw it all the way through here. So that's the high from last week, or last week's high, and that was enough for price to run that, to take the liquidity above the highs from last week and then reverse. I thought it would go to the fair value gap to get enough liquidity, but there was enough liquidity above last week's high to reverse. So that's why price ran up here and why it's valid that price reversed here. Because on the daily, I said I expect price to run this low as we're very close to it. So if it wants to run a low, it can go up first to get some liquidity to then run down. Because I expect it to run down, so it makes sense that it takes some liquidity from up here and then it reverses. And as I said, I expected price to go into this fair value gap for the liquidity, but as you can see, it only took the liquidity above last week's high, and actually it ran on a daily chart, it ran this high as well. So it ran this high, which is last week's high, and this high, which I don't think it's the price week high as well. No, price week high is this, didn't run that. Okay, so that's why it makes sense that price went up as it ran above last week's high and this daily high. And now I personally, I already expected lower prices. I expected lower prices last week. I expected price to maybe run this last week, but it took its time. You know, it ran up to touch this pretty much, to touch the low of this candle, and then it ran down, and you know, just didn't fully go for that. And yeah, this week we went up above this high, took out last week's high, took the liquidity from up here, and I think now we're good to go to push down to get this low, like to take out this low. But still we have to be aware there is liquidity up here, there is a fair value gap up here, so it's valid if it runs that as well. So yeah, I think that's everything from my side. I just wanted to show you why it made sense that price ran up here and reversed here. So it's perfectly valid, it's not random, and it makes sense that it reversed here. And yeah, just let's see what it does today. Today. I'm sorry, just was confused for a second. Yeah, let's see what price does today. And as I said, I expect price to go lower throughout the week, so that's my target. And yeah, I hope you enjoyed this video. If you did, leave a like, leave a comment, whatever. And yeah, I hope you're well, I hope you keep on studying, and I hope I see you again. Be safe. Bye.